Good morning, everybody, and welcome to Tuesday's edition of Derek Invests. I'm your host, Derek Miller. Let's get going. So I thought after yesterday we covered the stocks that were being added and removed from the S&P Mid Cap 400, and same with the S&P 500 as of June 24th, and we tried to find some setups there. So with that in mind, and given that our background shows us that the indexes are not in a position where they are looking to create any sort of meaningful trend reversal at the moment, we would go ahead and take a look at earnings this week and see if there were any setups that we thought made sense. We missed yesterday, Monday, right? But we're still in it for Tuesday. So what I'm going to do now is I'm going to share my screen. We're going to walk through Tuesday's companies. We have Oracle, KCZK, RBRK, Wednesday, AVGO, Play, OXM, Thursday, SIG, ADVE, and RH. And then if we have time, and I don't think it's taken too long, I don't believe it will, we'll take a look at yesterday's and see what turned out from those companies: YEXT, CVGW, and Fuel Cell, FCEL. I'm using the symbols in case any of you are listening to me via like a headset or something. Instead of company names, I'm trying to give you the symbols. So in any case, let's jump over. Let's take a look and see what we see. As we know, we believe here on this show that most of these companies have a price setup that is meant to occur based on its earnings or nothing, right? So what's going to occur is going to occur regardless of the earnings. What's going to occur is going to occur. The setup is there, or things will continue as usual. And a lot of times we can see that well in advance. So let's jump over and take a look now. I'm going to share my screen with you. If you see me look down, and I don't think most of you are looking at me as we are doing these, as we're doing these screen shares, but if you see me look down, I am just looking at the symbols so that we're looking at the same thing. First one's Oracle, ORCL. Okay, let's go ahead and pull up a monthly. We always start with a month, everybody, right? Why? It gives us a picture of the company. It gives us a picture of its history. It lets us know what's going on. Okay, so here we reach a high price. I would say average volume. I know Oracle's tricky, man, because when you get back before 2008, when you get the back, or actually 2010 and back, it was a wild ride. Everybody was trading Oracle. It was a very big deal, much bigger than what it looks like today. So we do see a few points here at these high prices with high volume. Here's one. Here's one. Here's one. And probably here as well. From a monthly standpoint, that looks negative. Okay. It looks negative because we are having high volume at a high price. As you'll notice back here, not the case, but there's not high volume down here either. Let's zoom in. I mean, it just, right now, what we're doing is we're building bias as we break the time frame. Now, I would say the bias is to the downside, but let's take a look. Okay, we zoom in. We have an area here. This is down at what? 50, 60 bucks. So's this. So's this. So's this. We're just looking at standouts, everybody. This is probably at what? 70. I would say that volume is bigger than anything down here. Oh gosh. And here we are in the range. So what we're going to end up doing, look at that. Okay, everybody. So this is where we're going to focus when we're looking at this, because we're now sitting in a range. It's not for an incredible amount of time. I mean, a year, right? A year. So we have this here, right? We have this here. These are our standouts. This here. this here. All right, these are our standouts. Now, what we want to do effectively is we want to see where is this volume taking place. And so if we follow it up, it's on that big bar. So this, look, this is taking place up here at basically the highest price Oracle has had in the last year. What about this one? Same. Here, as you can see, folks, there's no trick to this. It just is what it is. Right there, 115. And then where's this last one at? Remember, we're still on a weekly scale here. So this is actually, it's pretty meaningful. Oh, gosh. Okay. Guys, you know, this is a year-long range, and the price is taking place at the high level there. At the, goodness gracious, 125, 127 on the lowest end possible. You're at 115. That is selling at the high price right there on the weekly. Let's zoom in on the daily and see what we think. Okay, so we're gapping all over the place. A gap up, it fills. So gaps do seem to fill here. A gap down, it fills. Now, as we look at this, everybody, and we look at the daily, let's take a look. Now, I'm going to do, always the first company we look at, or the first stock index, or the first commodity, or whatever it is. Everybody sees that as trading view. I am still not logged in. I am a bum, but you're getting a free commercial right there. So that's pretty nice, pretty exciting. Okay. Uh, so when I look at the first company, the first index, whatever it is, what I like to do is I'll take a little more time and outline it a bit more than I will the companies that follow or the indexes that follow. Reason being, I want to give a lot of explanation so that any of you, if you haven't watched before, it makes sense to you. So that's where your volume's standing out on this daily chart. So once again, what we're going to do is we're going to see where it's standing out. So right here, that's the high price there. Okay. Okay, well, obviously this one is right here at the low. And then we're down here. What's this right here, right? Is it there? No, it's up there. There it is. And these aren't meaningful enough. So we're looking at a price here of 115. We're looking at a price here of 113. We do have some volume down here at 103. And then we have some pretty significant volume up here at 125 yet again. And this is a cluster volume, as all of these are. This is an interesting setup here, everybody. Let's zoom in a little more. So far, I would say so far, first off, this isn't a clear-cut case, but what I would say is that price rose from 102, but it did it through a gap. I mean, it was only capable of making it to about 110, 115, because it appears as though this is where selling has been taking place in the background. This was definitely selling back here. It didn't take much to lift the price. This looks like selling on Oracle. All right, let's zoom in just a little bit. We're going to get onto a 4-hour chart. I love a gap that fills the upside. You all know what I think that means, but this has gaps to the upside and the downside. On the downside, it's filling, and on the upside, it's filling. This particular stock appears to be in a real battle for direction. And that I rarely say that. I will rarely say that a stock looks like it's in a battle for direction. Okay, here we are. Gosh, they used a lot of volume to move it off that price, though. It took nothing for it to drop. There doesn't appear to be any real interest at this level. Um, but there's not a lot of volume taking place. There's not a lot of genuine activity here. Let me go back to the daily. With Oracle, I have to tell you that I think if it were me, I don't think that I would be doing anything with this. If someone made me place my wager on Oracle, if someone said, Derek, you have to choose which direction this company goes after earnings, I'm going to have to say down. And I'm going to say that Oracle probably has to go down to 100. I just, that would be my assumption right there. I would say Oracle to 100. That's just the way it looks. There's just no action, guys. There's no action. There's not a lot of selling up here though either, and you would think you might see some in here somewhere. But yeah, at this high price like this, let me go back to the weekly. Let me just look one more time. I want to look at this weekly one more time. Um, yeah, down to 100. Down to 100. Oracle's down to 100. Next company, let's go out to a monthly chart. Oracle, where are we? Casey's General Stores. Casey. That's easy enough. Okay, what do we see? Buying. On a monthly, there's not a lot of information here. Nothing nothing really. There's just nothing to write home about on this one so far. Let's go down to a daily. This one may be a. Here's something here. I don't see a lot of other gaps on this chart though. What I say, volume has picked up lately. What would you say? If it in fact has, I would say not much. Nothing. That's nothing worth paying much attention to. Let's go down to 4 hours. Dun dun dun. Down to 1 hour. Yeah, this one's going up on earnings. Yeah, this one's gonna rise. This one will hit. Casey will probably hit. It's gonna get back up here, 342. I don't know if that's really worth that much to anybody to know that, but that's where it's headed. There's opportunity there for sure. There's certainly opportunity there. It's not a monster, but that's where it's headed. That's certainly where that's headed. Not bad though. This thing's kind of, it's business as usual, but they definitely set it up for the earnings. Whereas Oracle's a bit different, man. Oracle it's going to take a dive. But Oracle wasn't exactly set up for earnings. That's been going on for a year. And are they going to use earnings to move it? That's what it appears to be. That's what I can tell you is it appears like they'll use that to move it. But that setup has been occurring for this is Oracle's on an earnings setup. Casey is an earnings setup. Casey CASY. They've generated this setup. They've generated that price fluctuation to move that back to that high. ZK. Oh, this thing's brand new. No opinion. RBRK. Can't have an opinion on everything, folks. There's honestly not been much in here that I've been all that excited about, period. Let's just take this into a 1 hour and see if there's anything to be said. I mean, there's nothing to be said here, everybody. This thing doesn't trade. Brand new. They can push that price wherever they want. I stay away from stuff like this. Zeker, Rubric, I stay away from this stuff. That price can be pushed anywhere they want to push it. And by they, I mean big hands, institutional hands, more knowledgeable hands. The people in control of the supply of this stock can do whatever they want with it. I don't touch that stuff. Let's move on to Wednesday. We have Broadcom, AVGO. I nailed this one. I have a call from this earlier this year. I've already nailed this one. All right, let's take a look. We're going to have to go down to a weekly for this to mean anything. What is this telling us? Well, that's up there at 1,100. You're at 1,400. That's a 30% run since then. Well, the zoom in is going to be interesting. I'll tell you that much. This thing is obviously has had a massive run, as certain stocks within the NASDAQ have. All right, what do we got, everybody? Where is this volume at? See, this is 30% below you. They definitely use volume to push it to this high. All right, let's do a quick outline. This isn't this is fairly obvious here, everybody. There's one. Here's one. And I would go so far as to say this is one. Now, where is it? Let's just go to this one. I mean, it starts right here, but it doesn't matter. It's from here. Whoop. From here to here. Okay? This area right here, which gets you as high as 1150. Come over here. Get started here. All the way to here. All right, that gets you all the way to the highs. And then we have one final one here at 1350. This is your daily, folks. What do you see? This is 30% below you. This is the volume it took to get to these highs. This is the volume that's been occurring. We have earnings coming out on Wednesday. We're sitting at highs. What do we think? I think you should be thinking the same thing I'm thinking, which is this stock's coming down in price. Let's see if we have some verification of that. That's at the high water mark. That's at the high water mark. That is not. That's now 1,200. So that's, I know it's crazy, but that, that's 1,200, 15% below you. That's at the high water mark. This is at the high water mark. This is pretty much the high water mark. So's this and so's this. Price is coming down here. Oh, yeah. Look, I would say at earnings release, you can say AVGO. This is on Wednesday. I would say if you set your sights at $13.20. You will not be disappointed. All right, what is next, everybody? We're looking for Dave and Buster's. We're headed to play. All right. Oh my, we're just going to go backwards here, everybody. We've done some pretty thorough examinations here. Oh my, that is selling. That's no doubt about that. All right. We're gonna do this in reverse. Doesn't matter which direction we go. Either way, we should be able to adjust our picture. So this down here is 35. That up there is 70. Wow, it's a 50% run. 35. This is 40. And then you had your selling up here. All right, let's back this up. Weekly. All right, you got a ton of buying down here at 8. Sat in a range. Is there anything really to speak of? Probably here, which is at a high price. Folks, you can go along high price, high price, high price. This is what gold's going to do. High price, high price. This is going to pretty quickly. I mean, this is obviously coming down to 32 on earnings. It's taken its path back down to 32. So let's go ahead and get back to the 1 hour. Give us a better idea of where we might be headed. Maybe not. I just want to look. 30. What's going on now? Let's do this. Is there anything we can find in here that seems like we're having some volume bubbles? They're going to use earnings to push this to 52. So for earnings, they're going to push to 52. I am going to confirm this. I'm going to go ahead and do this and take a picture, though. They're going to push out to 52 on earnings. That's on Wednesday. And then after earnings, this company is genuinely being sold, everybody. But we're talking about earnings right now, and they're gonna bump this up. They want to sell some more shares. Sell more shares at a higher price. They sell. All right, what's next? Oxford, OXM. Monthly. We're going to move now, everybody. What do we see? Increased volume for sure. Highest volume spike right here. Is that the highest? Doesn't look like it. What's this? Okay, it's all up there at 100. Let's zoom in. We're going to move quick. No more outlining. We're going to go. Volume bubble for here for sure, but That's not really even enough to matter at the moment. Let's take a look. Okay, this is definitely a volume bubble right now. Here and here. This is the 4 hour. That is selling at the highs. Definitely selling at the highs. Over what time period? Last couple of months: March, April, May, June. 1 hour. Anything? Look at that volume. That is insane. Okay, here. People trying to buy the dip. That's funny. At 103, high price of what? 115. It's off 12%. 30 minutes. Okay, 15. All right, 5. I'm scooting here, folks, because this one isn't. I mean, honestly, it's not all that exciting. You have a gap at 103. I mean, it seems to be being sold off at this higher price, but there's nothing to write home about. This is one of those. It's interesting. There are not a ton of setups actually. I typically see a lot of earnings season. I'm seeing now. Moving on to Thursday, SIG. I'm gonna just stay away from that one. I mean, I'm already making some risky calls today. That's the truth. I am making calls on things that I don't necessarily believe in. This is interesting. Down here at $20, this thing has some massive buying. That's no joke. I mean, that's massive buying, everybody. Good gracious. Look at this. This is from what? Well, what's this price? No, that's up where you're at now. But what about down here? This is where it really starts. So 55, something like that. But what's the low? Oh, my God, 10? All right, let's zoom in. What's it look like now? It looks like volume's drying up. What's this? Is that the high price? It's at 80 or so. Anything significant in there? Let's go down to a daily. All I'm really trying to find you folks, look at that's that buy the dip mentality that everybody has right now. $88 to 103. It's moving price though, I'll tell you that much. Gap fills, sinking price, large volume. It's obviously trying to pick up supply. Is there a lot of selling at the high side? No. I mean, they're much better setups than this. Range bound for all of 2024, which, you know, as the market's making new highs, that's not exactly, you know what I would say? I would say simply for earnings that this is a 105, 106 by Thursday. Or what is this? This is a Thursday. Yeah, this is a Thursday earnings. I mean, yeah, I guess 106. Ultimately, this is down. For earnings, look, again, I'm making calls here that I wouldn't ordinarily make. I want you to know that. I'm just telling you that if someone asked me, hey, gun to your head, which way does this go? I would say for earnings, SIG. No, get out of here. SIG will hit 105.50. Two, obviously, the upside. Let me take a picture of this. However, SIG being sold at higher prices SIG is a sell. All right, what do we have left here? We have Adobe. Oh, baby. I haven't looked at that name in forever. And that's why, folks, we don't see a lot of great setups. We're not actually looking at a lot of companies that very many people are interested, especially on the trading side, ADBE. I might be doing this live for myself. I don't know if anybody's going to watch it. Um, I don't know that these companies matter to anybody enough. Um, yeah, this one already looks pretty darn obvious. So, I mean, as I just said, these are not companies that people are trading or care all that much about. Um, if somebody asked me what Adobe was going to do, the fact that you have this level of volume on a daily chart and all price did was fall, I mean, I think it speaks for itself here. I'm going to zoom in because we are talking about earnings, and there is a rather large gap here. So they're probably going to pump this thing for that gap, but I'm staying away from this one. Look, they're done with this company. I would say that your future price directions, probably simply to sell more shares at 560, but I'm just going to stay away from it. Because there's I mean, honestly, there's better things to trade than almost everything I've shown you today. I don't think there's anything on here I'd be excited about. Either way, like excited meaning up or down. I mean, look at this. Who cares about a chart like this? Right? I mean, I'm not gonna comment on this chart. It's junk. It means nothing. What are they gonna do with this? Well, it looks like this company is being sold. I mean, this is right to fall. That's I mean this and they're done. And for some of you out there that are going to have all these fundamental reasons why they're not, I assure you, these two they're done. No one cares. See, stocks have cycles because they're based on human beings. And that's what you have to remember, everybody. You have to remember that what we're looking at here, we are looking at charts, okay? We are looking to see what people are interested in. But you have to understand, these are people. And sometimes they just don't have any interest left. So, in any case, look, I hope that was helpful. I hope you enjoyed the presentation today. We ran through some stocks. Hopefully, you learned something too, because that's the point of this. I'm trying to teach you the methodology. I want you to understand what I see. Once you understand what I see, do I expect you to be able to do it? No, I've been doing this for 25 years. What I expect you to do is reach out to me so that you can become one of my students. I can show you how this is done. I can give you the live updates weekly. Most of the time, it's bi-weekly, and we can do one-on-one sessions, get you set up with a proper in structured, disciplined investment plan based off the three pillars of any investment plan. If you don't have it, you shouldn't be trading. That is cash management, risk management, and investment management. If you're not even sure what those mean or how you structure that, you shouldn't be trading. You're going to lose. I promise you. If you want to follow me, here we go, everybody. This is me. That's my Twitter handle. Please follow me. That is my email. Take it down. I'd love to see y'all. I'd love to get some questions and reach out, because what I really specialize in is one-on-one, folks. I love to give this information away free, and I will continue to do so. I'm looking for some sponsorships now from some businesses. You don't have to be in finance, but if you're looking to be out there involved with a financial investment professional, then I'm your guy. Let's talk about that. If you are an individual investor or an RIA that's looking to change up what you're doing, you want to increase your assets under management by not only speaking differently than everyone in your competition, but also by knowing more than your competition. Talking about asset allocation and reciting CNBC, folks, no one cares about that anymore. They're looking for something They're looking for something bigger. They're looking for something better. They realize that asset allocation is not a way to manage money. And folks, trust me when I tell you that it's not. It's ridiculous. I can show you how to do this. And I do it for professionals at the RIA level. You guys that are at those big brokerages, you're not even allowed to do this anymore. So if your broker is at a big brokerage and you think you're fine because you have a big name behind you, actually, it's quite the contrary. He is handcuffed. He is shackled. He can't do this stuff. Okay, so reach out to me, please. Let me take a look here. I am going to. So this is also I do an EQ VIP Mastery Financial and Investment Planning course. What that is about, the reason I call it EQ is because I will tell you right now, the average investor's biggest enemy is his emotional intelligence, emotional responses. From 1990 to 1999, the S&P 500 returned almost 11% per year. Almost 11% per year, right? That's not a bad average as far as that investment goes, the S&P 500. The average investor made 1.2% per year. Why? Because even in the raging bull market 90s, emotional mistakes are made so consistently that they hurt their performance by almost 90%. That's the average investor. That's a fact. You can look that up. Please do. This is my VIP mentorship EQ Mastery Financial and Investment Planning course. Please reach out to me, Derek Miller. Again, I'm going to go ahead and throw up my information, dmiller@prometheaninvesting.com or Derek at vpgtheory.com. I specialize in one-on-ones, and I will first get you set up with your individualized, structured, discipline, investment approach, which will be built on first off of you, and it will entail cash management, risk management, and investment management. Listen, I work with people's budgets, folks. I want everyone to be able to do this. All right. This isn't a cash grab. I don't need everything to happen all at once. What I do is I work within a budget. It has to be a reasonable budget, nothing that's ridiculous. Otherwise, it's wasting your time and mine. But I do work within reasonable budgets because I look to have students for 10, 15, 20, 30 years from now. If I'm still around, because I'd be 75. I'll still be around. Who am I kidding? All right. Listen, everybody, thank you so much for tuning in. I really appreciate your time. You have a great day. Hopefully this helped you with some of the earnings this week. And as always, remember this, mental health is the most important health. If you're not healthy up here and you're not good up here, you can't be good out there and you can't help out there. There's nothing you can do. So if you're feeling down today, get out, see the sun as it shines in my face right now, as we've been speaking for the last 40 minutes. Go do something that brings you joy, right? Sometimes you got to fake it till you make it. Throw that smile on. Today's problems will be solved, I assure you. As bad as they feel like they are, you're going to figure it out. You will figure it out. Every day above ground is a good day. And if you need someone to talk to and you don't have anybody, you reach out to me. I'll talk to you. All right, everybody. Thanks so much. And I will see you later today.